Hello, everybody. I'm Sam from Xbox Game Studios, and I'm here to moderate a panel on mergers, acquisitions, what's happening in the future, and what the landscape looks like now. And very luckily got together a great panel that shows the full breadth of what we do and shows it from every angle, shows it from publisher through to buyer, through to the buyee. So I'd like to welcome on stage our panel, all at once. Come on up. So we have Andrew Ponemar from Enter Capital, CEO of Enter Capital, an advisory consultancy on mergers and acquisitions. Great. We have Andrew Brown, the CMO of Keyword Studios. We have Gilles Longarou from Virtuous. We have Laurent Lamboul, the outsourcing category manager for Ubisoft. And we have Ron Ashtiani, who is the founder of Atomhawk and now the founder of a new consultancy. Yeah. Relentless Radical, is that correct? So before we start, I wanted to do a little bit of background on M&A, where we are now, but I'm going to keep it short because I really just want to ask questions. So I like data. I come from an artistic background, but I like data. I like seeing patterns in the data, hoping to see indications of the future, hoping to get an idea of what the driving forces are. And it's always fun to try and find those small discrepancies that give you an indication of a pattern or where the next dot's going to come from. Sometimes they're really hard to find. So if we look at deals done, we can see that Goodbye Kansas are just a little bit behind Keyword Studios. But what's interesting is if we look at this chart here, we can see that there is a big rise up in the number of acquisitions, but we can also see that there is a slight tail off happening at the moment. The value of the acquisitions has actually gone up by about $1 million per deal. But the number is sinking. And so my first question really for you, Andrew, is this a blip or is it a trend?
I'm not sure it's a trend. I think it's maybe a little bit more work for keywords this year and everything will look great. It's going to be up. Maybe not. We don't know. So I think it's like if we have like some slides about IT services industry, right? Mm-hmm. And the situation there is there are several equally sized companies who have like around 5% of the market, and they do pretty much the same number of acquisitions. Like it's not that different as we see in the external development, game development. So the idea, I think, here is like there are other good companies on the market who will catch up. I think they will do more acquisitions, and the market is good. We have one player with 15% of the market, approximately, I guess, right? Something like that, and the rest is around like 5, something like that. So we estimate that probably in the current, like in the next years, we'll have more acquisitions in the space. Hopefully, we all want to see it. But maybe we'll all be affected like typical economy cycles in the current maybe 2-3 years. If economy will go down, the prices will go down, less liquidity, less transactions on the market, and the valuation multiples can go down too. So if you're considering maybe selling your company at some point, probably next 12 months, it's a good time span. We have new platforms coming, new consoles, new streaming services, and probably the market will look great. A little bit more difficult to tell about the future in 2 years and 3, and we are concerned about the economy and if it's strong enough to sustain for the next like 3-5 years.
Okay. So, I mean, what do we see as, I mean, the spread there is much, much more even. They have just Accenture there at 20. What's preventing, you talked about value, but there are a larger range of services coming out of, say, the IT industry. Is that one of the factors that's preventing this kind of more even spread of acquirers, or is it just a less of a desire to go all in?
I think at this point it may be a little bit expensive to buy companies in the market. The valuation multiples are pretty expensive, despite having access to capital. For example, we represent PE firms with around $2 billion under management, And for us, it's a little bit difficult to find good acquisition targets because even if you find those, it's crazy expensive and doesn't make sense to buy them out. Okay. So it should be some synergetic partnership. So we are buying, we are growing together, we're doing something like incremental things. And now the price environment is a little bit tough for buyers, so good for sellers.
Yeah, I'd like to expand a bit on that. The fact that this market is influenced by not just the service groups buying smaller service companies, but also by publishers buying developers. So 2 examples of influence. The series of acquisitions made by Microsoft in 2018 has had a big influence on valuation of studios from last year. When you are a company like a Playground, historically, you're not necessarily very different from a company like Gobo. So which route are you going to go? Are you going to go the publisher's route or the service group route? So it's not just a services industry issue, it's an entire game industry issue, how the consolidation plays out.
Andrew, I wanted to ask you as well, because we are looking at one of the bits of data that did pop up for me on this one again, even though there's a little bit dominant. Goodbye Kansas was the one that actually stood out a little bit for me there. Goodbye Kansas made up of several studios and several different service lines, nearly all of them creative. But what they have done recently is become one company. They've become one group. They have certain advantages to be able to do that because there are certain location advantages, but they're now all in one building and all operating under one name, rather than the several individual names that they had before. So when we look at the acquisition market, some of the questions we ask ourselves is, what's the end game? Where is it leading to? What's the strategy behind this? And when we look at somebody like Goodbye Kansas, I'm not saying it's an end game, but I'm saying you can see a destination there. They have got to a point where they are one studio. So the question really I have is there an end strategy, or is it not very important? Is there an overall kind of strategy behind the acquisitions and the way that you're acquiring at the rate that you're acquiring at the moment?
Yeah, I mean, I think we're trying to build a platform that is easy to access and provides services from concept to live services at the end of that, and it's an ongoing journey. So, there's a huge number of elements you need to be relevant in all those different parts of the life cycle of a game. And that's the strategy, is to build out those and be accessible and join them up and make it efficient, right? But at the same time, when we're acquiring owner-operator businesses, and that brings, a certain passion, drive for results, quality, that focus, and keeping that, as well as supporting them with some of the things that a bigger organisation would do, is a balance.
Yeah.
So when we look at something like localization, for example, it's easier to consolidate that. But when you get into very creative areas, you don't want to put the burden of a big corporation on top of those people. You want to allow them to do what made them great in the first place, and just make it easier to be able to do that. So I think the end game is high quality, efficiency, accessibility across all these different services from end to end, but to keep what makes them really good and not force them into some cookie cutter sort of, corporate feel. So it's kind of a balance.
So do you find that now that you've reached your PLC, obviously, that there is a PLC influence on that strategy as well? If there are outside forces acting on that wouldn't be there?
I don't see it as a constraint, quite honestly. I don't think we behave differently in terms of how we do business with our customers as a result of that, per se. It brings a certain level of responsibility for reporting and good management, financial security. So that's the bit we have to be clear on, and that's maybe a burden that we do put onto our acquirees, right? But it's not super heavy, and it's not, we're on a mission, and we're on the mission I described, which is to make that platform available and workable and efficient, and that's really where we focus. And then that other stuff is stuff you've just got to do.
Right.
Yeah.
Okay. And so what's the perception of a market that doesn't really understand the gaming space? So when you look at the stocks and shares markets and some of the big investors in the pension funds, these are slow-moving organizations, and you would think that they would look to the gaming space and say, well, we just don't know what it is, and where's the risk? Is there an element of education in that? And does it go the other way as well, into educating the market itself to understand what we're...
No, I think investors don't understand games very often. I mean, I'm sure we'd all find that. It's, you know, I think when you work in the industry, however long you work in the industry, you never stop learning, right? Something happens every week, and it's like, wow, that's new. I better figure out what that means.
Yeah.
If you're on the outside, that's just really hard to get your minds around. I think what's great about what we all do is we work across, you know, a very big spectrum of games companies, and as long as you know the whole thing keeps growing and you're plugged into all, you know, pretty much everybody, you're in a good place. Okay. But yeah, I mean, you do need to educate. I mean, that's a constant requirement, certainly for investors, yeah.
So Andrew, so we're talking about investors in that respect, so it seems to me that if they don't understand the market space so well, they don't understand the game space so well, and you're talking about maybe there's a market downturn in future or a recession, would that mean that they're more exposed to being nervy about it in terms of share price, in terms of investment, with that lack of understanding?
Well, actually, we saw some IT service providers who are coming into the industry, right, buying for the companies from time to time. A little bit different, I think. It's like maybe the alignment is different if it's like art production, so it's going to be probably gamification for banking clients or something like that.
Oh, okay.
And we need to ask founders of studios, are they happy with that? Are they going to do the gamification for enterprise clients or something like that? So passion is very important in the industry, right? And not many other industries, it's like pre-requirement to be passionate about what you're doing, right? So it's different. Not many private equity investors in this space, in the gaming space, in game services particularly. So a little bit different market, and the passion is really important for sellers, and for buyers it might be not that understandable.
I think when you've got generally a bull market, technology is where people put their money. That's where they think the growth's going to be. I mean, in general, games being part of that. And then when it goes the other way, they generally run away quite quickly. You know, they know it's high growth, but they assume that means risk. And games, I think, is not in that same risk environment that a lot of the high growth is. But you know, that lack of education leads to that, I think.
And the cycles, right? So it's a little bit difficult to do transactions when everything depends on the title. Your workload depends on the title, and it's really like the services industry is pretty cyclical, so a little bit different. If we speak about software as a service, when you have subscriptions, you have some estimations of your churn rate, and you can predict the future. It's much easier for lenders who finance the transaction, for private equity investors, and for acquirers. But in the services industry, it's a little bit different.
So, and as we move more titles becoming games as a service, I guess that helps even that feeling of risk out becomes more predictable. Right. As you talked about different types of acquisition, and I think when we spoke earlier, you mentioned about a horizontal and a vertical strategy to acquiring companies. Can you explain a little bit more about that?
Let's continue to talk about Microsoft. When Microsoft acquires a Skype, for me it's Microsoft trying to enter into a new area. It's a horizontal type acquisition. When they acquire a playground, when Xbox acquires a playground, it's more vertical. Like they add another lower layer in the value chain. On this map, I think you have examples of horizontal and vertical. Keywords going from localization to cover all the different types of services is an example of horizontal. We have a more vertical strategy. We're just focused on helping game creators create bigger blockbuster games. So we're going to look for studios which have that AAA capability, which are good at collaborating, where the founders are not looking to retire but are looking to grow their business and want to work with us to offer a better solution to these AAA game creators.
So one of the things we look at is, I guess, the advantages of doing this from the buyer's point of view. And does it be, for you, I think we've not maybe seen Virtuous be as active in acquisition as we might have expected over the last couple of years. And do you believe that there's a focus now also on R&D and process that's coming from the larger businesses or the acquiring business because they have the size to be able to spare the resource, spare the time, take the risk on the R&D?
Well, we have a team which is very active, finding targets which fit the three criteria that I just mentioned. Has not proven easy, but we'll continue to have that goal in mind. Having said that, the group has always had a strong organic growth. Our average organic growth rate is between 20 and 25% over the last 5 years. And when we're reaching the size that we're at today, over 1,500 people, we have to think a bit more long term. When we were a $10 million business, I was very focused on what happens the next month, next quarter. At the size we're at today, we have to be focused about what happens in the next 3 or 5 years. And we have to make sure that we're not just reactive, we are actively anticipating on what's going to happen. Obvious challenge that a lot of us have talked about is how quickly are the tools changing and how that's going to impact the way that games are being developed. We ran a survey recently. We'll publish the results of that survey soon. Over a couple hundred game company managers. And we asked them, what are the biggest technologies that you're investing in? And AI came out, by far, number one. We also asked them, in 12 months, what percentage of art assets do you think are going to be produced through procedural or AI? And the answer was a whopping 50%.
Okay.
I don't know how good our sample or how informed our sample was. So don't quote that data. I don't think it's a data point. It's more indicative of what we need to be thinking about. I'm not sure it's going to happen in the next 12 months, but there will be an impact long term. Our R&D team needs to be on the ball. They need to inform our studios about what are the best tools to leverage, and we need to develop our own tools so that we have solutions that our competition doesn't necessarily have.
So do you think we're going to see some more activity in acquiring middleware companies as so much as service companies within these studios?
So when you look at the valuation of technology companies versus service companies, I don't think it's easy for us to be in that market. So I don't have an easy yes to say. Of course, we'll be looking. The proven technologies are extremely expensive to acquire. So my dollars are probably better invested trying to develop our own technologies rather than placing bets. I think this is the stuff of bigger size companies.
Don, going from the buyer's point of view, from the publisher's point of view, for you, what are the advantages of having a company that is in the acquiring space that is growing in that kind of a way and is adding either multiple service lines or service lines that expand on it, that dig deeper into an existing service?
Well, even if it's not obvious at start, since my role at Ubisoft is to have an overview of all the type of deals we have with all the partners and try to have a more coordinated approach or a strategic approach, I would say. Working with big company also as a management risk kind of view is helpful. I can definitely have talks with those companies that I can have with smaller ones defining how we can find bridges between the different projects we're working on with them or with the different service line they can propose. That's something that I found very positive, is that I can think and talk and discuss about how our industry is evolving and helping them as well as it helps me to look into the future and see where they should invest, knowing that big companies have maybe more facilities to invest in R&D and to indeed be prepared for the future. So I can have those kind of interesting talks that clearly can bring an adding value. And I can discover, talking with them, some kind of innovation that can be a benefit also for all my teams afterwards.
So you're seeing it coming, you're able to inform as part of a developer and seeing the challenges you have as a developer as well as working on the services side. Is there anything that makes you nervous? Is there anything that makes you nervous about this strategy as well?
Definitely, if I look on the procurement side, facing a market with a wide audience is, of course, easier for me as I can have a better power in terms of negotiation. So in that regard, that could be kind of a stress, seeing the market being reduced to a limited number of partners I can talk to. And also, what scares me a little bit is that I try not to put all my eggs in the same basket. Obviously, it's quite easy. But if I don't have a choice, if I don't have a plan B anymore, if something goes wrong, that can be tough and difficult. That's where the balance between offer and demand is indeed interesting to remain on a level where I don't face a monopolistic market. We're not there yet.
Yeah, exactly. Let's relax. At the risk of repeating myself, because we had that conversation last year, there are thousands of developers and service providers on the market. And
I would say it depends on the categories, on the type of services.
Yeah.
It's not
so you're talking about QA, for example, right?
QA, localization.
Look in Asia, in India, you have more solutions which could be real solutions for the games industry very quickly if there was a need for you to diversify. The point I wanted to add to what I said last year is I think the bigger risk for publishers is what happens if a good studio or a good vendor gets picked up by a competitor. I think you're way better served if a Keywords or a Good Backansas or so anybody on that list picks up one of your good vendor studios than if it's picked up by Rockstar, for example. Right? Seriously. I think it's great for Rockstar. I think what they did was a good vertical integration move, but it's a problem for the other publishers who were using the example studio I'm referring to. So worry more about how do we help these good, small, medium-sized studios grow and offer better services than monopoly. I mean, we're very far from that. I think we can agree on that, right?
Yeah,
so
completely.
I mean, you mentioned that there's thousands of companies, there's lots of different service lines in there, but the actual number that are in a position to be acquired or that have the reputation to be exciting acquirees is much, much smaller. And I think there are some acquisitions that change the market a bit, that really shrink the market when they happen. So I wonder if just the fact that it may look like there's a lot, but it could actually be quite a crowded space, is one of the reasons why we're not seeing the spread of acquirees that we see in the IT service that we brought up earlier, that we're not seeing that kind of lots of companies delving into this and having a much more even spread.
Economically, if what you're saying is true, I should be able to increase my rates by 20% a year, like some software companies do. That's where you have real monopolies. And they can increase their rates super aggressively because of that. I can't. So I guess that kind of concentration is still...
it's still wide enough.
It's still really far.
And that kind of leverage in rate increases obviously something that can make us nervous.
Yes, but that's not what anybody here is focused on right now. What we're focused on right now is dealing with the challenges of the next gen. Yeah. How do we build better solutions, better platforms? We're not mature yet. we're still in a fast growth industry. And I think the concern you're talking about is a concern which will arrive further down the road, maybe in 10 years, when we are a more mature industry with bigger players on all sides.
I sometimes wonder if we will ever be a mature industry. I don't know if it's a thing. I think we will just constantly be growing and evolving and thinking we're further down the line than we actually are. And along those kind of lines, Lauren, you spoke about there's an opportunity with these kind of companies to find services we don't yet know we need. Those gaps, those efficiencies. And I think, Lauren, you would talk about this in the terms of because you have companies like Keywords, like Virtuous, that deal with multiple service lines, they're more visible, the gaps where those opportunities for efficiencies are more visible to them. And my question is, would we encourage that? Like, if one of these companies took that kind of advantage and said, hey, we've got a service that you may not even thought of before. Is that something we're actively looking for out of these newly acquiring companies? Or?
Well, that's something I'm always interested in. As I mentioned it a bit earlier, facing companies that are specialized in some aspect, that can invest and understand how the future is evolving. I like when they come talk to me and say, hey, I want to grow in that direction. What do you think? It's really what we call partnership. I try to give them as much visibility as I can, not on project, but much more on needs, current needs or future needs, and how I perceive it by talking to a lot of people internally. And I try to, and with them we try to see if there's a match. Sometimes they come with innovative solutions, things they have worked on their own, and I try to see how this could eventually answer a need that has not been expressed internally sometimes. And that's where it's getting very interesting, is finding innovative way of making games. As you mentioned, we know that we're going to need tons of content. The market is exploding. The consumer are consuming the content more and more. We need more content. We need to test those content. We need to localize those content. And we won't be able to do it manually anymore in the future. There are a lot of questions about how can we create those content in a smarter way. And that's definitely the type of discussion I like to have to see, okay, how to address that? Mm-hmm. And making sure that we don't end up in a situation where we just struggle delivering what our studios are asking us to deliver.
Well, that's where we see some of the innovation hopefully coming out. Ron, I believe I've got a slide here. The number of IT services and consulting services was huge. But what happened in the single services was that they started to shrink down, and instead of going from the single, most of the companies went for single IT companies to give them their services. But as the market matured, that changed, so they went to multiple. So it almost went the opposite of what we're looking at here. And I know that what we are looking at is there's a degree of creative choice, of creative freedom that comes with our market. And maybe some of the nerves that we look at are actually creative nerves rather than just pure business risk. Yeah. And as we see that the number of acquired companies comes down a little bit, I wonder how much on that creative side there is from the owners and the founders, whether that resistance is actually coming from within the companies that are open to being acquired.
Yeah, I mean, I think one of the things we definitely saw was if you go back to like 2014, 15, there was a bit of a gold rush. You know, we'd never had like large-scale acquisition in this industry. We were really a cottage industry, you know, like lots of creative people, technical people, founding businesses and just doing cool stuff. And then suddenly you've got people making acquisitions. And I think there was definitely a fear that if you didn't sell, what would happen? You know, what if one of the big boys, for example, bought your competitor and started pumping millions of dollars into them? You could end up, being squished, basically. So I think one of the reasons why we saw such a bigger curve that's now tapering off a little bit is because that gold rush kind of happened, and then since then you talk to the customers, you know, and the customers actually like choice. They don't want, you know, to have to just go to one house, which was the message at the beginning was, well, you know, we're going to build this huge corporation and then everyone will come to us. They don't like that. They want creative choice. I think the other thing is just naturally as well, there are less companies available to buy now. And I think that's probably the biggest reason why we're seeing a taper off. But also creative people just want to do what they want to do. And I think there's always that fear that if you sell, are you going to lose, the very purpose that you set the business up for in the first place? So I think people are getting a lot more savvy now as to who they should sell to, what a deal should look like, as opposed to like 4 years ago when no one knew what a deal looked like, and they were just incredibly flattered to get offered,
And what changes did you go through after being acquired? What almost on a personal level, really, as acquired business, as a business you grew from the bottom up, and then you now become part of the corporate structure. And Andrew Brown alluded to it. There is now a thing that has to sit on top. There's no longer flying by the seat of your pants quite so much. There is a quarter that you have to report to. There is long-term planning. How did that actually impact the business after you were acquired?
I think it must be different on a deal-by-deal basis, right? Because obviously Keywords now is a very mature company when it comes to buying other businesses, and there's probably a good degree of process and learning that's gone into that. I would definitely say, if you, for example, did a deal with a private limited company where you're not even being bought by a public company, that's a very personal connection there. You've got to be sure that these guys that you're going to go into a deal with, you're going to be working with them every single day. And if there's a stock option in that as well, that stock's not sellable. So, you're basically tied to these people just as you would be with a business partner. So that's the more extreme end, and I think that's the kind of end that you do as a strategic partnership between friends who've maybe known each other for a long time and want to merge two businesses together. I think, particularly in the public space, the challenge is always that, as a founder of a service company, you're nearly always a technical or creative person. That's the background you'll have come from. And the thing you're most interested in is usually what you make, and also you enjoy doing deals. Usually that's the purpose. You want to service your clients, you want to grow the business. Reporting, I think, is probably the hardest thing, and particularly in a public company where, as the owner of a business, you usually own it and everybody reports to you, and suddenly you're not only managing downwards, you're managing upwards. That's a challenge.
I can certainly see how. And have you felt that from companies? Have you felt the change that creatives and people who have started have had to go through in order to
Undoubtedly, they've got to do things differently to the way they did them to some degree. But I think I mentioned it at the beginning. I think we've worked very hard on making it feel like a high-energy, creative environment more than anything else, and supporting the vision of the founder through to a different conclusion, accelerate it, give them access to customers or technology or different ways of doing things they didn't have before, and that's far more beneficial. It completely outweighs any admin and reporting. Yeah. If you're an owner-operator, generally you don't sleep at night for various reasons, and if cash flow is a problem, or where you're going to go next, or what might that competitor do to you in the future, some of those things go away, and that's an offset, right? Mm-hmm. So I think we've learned lessons along the way, and I think we've done a really good job actually in getting people to see that benefit, and you just look at our retention, look at the retention of our owners, and I think that kind of tells you that it works.
I would say though there is something that it's definitely, so when you're saying about the stress of running a business. Yeah. The thing with the stress of it is that is actually purpose as well. That's the thing. So, you get up in the morning, yes, okay, a deal fell apart, you're stressed about where you're going to find, a couple of $100,000 that you've got to have to fill that hole. But it gets you up every morning because your team are relying on you to put food on the table for them. Yeah. I think once there's an acquisition, and a lot of those big picture decisions actually are no longer with the owner. So if the owner is essentially the board of their private company, and they join a group, and then a lot of the big decisions then disappear off into a much higher up board. I think it's on that company that buys them to make sure they find them a replacement purpose. Because it can very easily get into a situation where it's like, well, now we want you to just focus on sales or focus on delivery. But actually, all of those big picture, sort of cerebral purpose things you had kind of go out the window. So you've got to find something new to occupy a passionate person, if you know what I mean.
You took up golf, did you? Was that what you did?
Hey?
Yeah, no, I think we've always got targets, we've always got the next thing you've got to achieve. And it's what I mentioned. I think, yeah, sure, you don't have the same types of stress maybe, but you create more stress for yourself because you go, well, now I've got an opportunity to do something I couldn't do before. That gets me out of bed in the morning, and that creates its own stress and pressure, in a positive way, maybe in a negative way, but it still creates that pressure. But it is different, and you're right.
Absolutely.
I don't think you can't compare the two exactly.
There's a big difference between, particularly I think when times are hard, when you're doing something for shareholders, yeah. And quite often the shareholders are shareholders you've never met. They're big corporate finance, sort of companies or large corporate investors. There's a big difference between getting out of bed and going through punishment to deliver what they want versus going through a horribly punishing time to make sure your staff don't lose their jobs or or you're able to facilitate this new thing you wanted to do in your business. And I think that's one of the things that it's very hard. I think each individual who considers selling, they have to think about how much they enjoy that type of pressure. Because I think for some people, that's what gets them out of bed in the morning, is knowing they're doing it for their team and they're doing it for their people rather than shareholders.
So you think this is, I just think, because you've got a lot of experience in the IT side, and we're examining that area as well. So is this creative aspect to what we do and the constant evolution of what we do, is that the big differentiator between? Does that make us more unpredictable, or are we still going to follow a similar path to a matured IT market?
I think the path is pretty much similar, I guess. And the industry is growing. We talked with gentlemen, and it's like it keeps growing. We estimate it's like a couple of billion now, but we're sure that it will be much bigger. More and more work is being outsourced. And it's hard to say exactly at which point it's like the company becomes way too big or something, right? So 15% of the market, is it that big? Like Disney in the movie industry, right? And the entertainment, it's like the share is around 30% as we estimate. So maybe it's not that much, like 15%. So we think the process is pretty similar, and the criteria for acquisitions are pretty similar too. You need to have a founding team, pretty strong founding team who would love to stay. I think you wouldn't consider any acquisition if the founding team, the owners, would quit the company right away.
No, you want to keep a founding team for sure, yeah.
So it's like not an option for you, right? So in IT services, it might happen when like your founders are leaving the company and it's like totally integrated without founders, but it's an exception too. So you both would consider, right?
I would just qualify that slightly. It's a question of maturity of the business. Some businesses are at the level of maturity where the owner below him has put in place a management layer where the business can run itself without the owner. In our industry, it's still very rare. But in such a case, you could imagine deals where the owner could do something else, as long as the team below has the motivation, the incentive, the drive to keep growing the business. I'd like to add one thing. You talked a lot about the IT services industry, but I think we should compare ourselves to other creative industries. We have two benchmarks that we could refer to. One is the movie industry. Mm-hmm. In a way, you could say, hey, we need to figure out a way to build the ILM or the MPC of games. These companies are helping movie companies make blockbuster movies. Who's going to do that in the game space? And you also have advertising, which has demonstrated that you can both have mega large groups addressing the needs of mega large consumer companies, and at the same time retaining their creativity through many different teams that they know how to motivate and manage, and leaving the consumer goods companies with lots of options, lots of creative options.
So there is. So I mean, my final question, really, which I think you've actually gone quite a long way down answering, is taking a look into the future. If you're looking 5-10 years, what are your predictions for what's going to happen in this space, in the M&A space and the gaming space?
No, I think it's going to be a similar profile when we have maybe 10 good-sized companies, not only keywords, which is like it keeps growing. I think other companies will catch up, but at some point, I guess it will be like equal market, similar to IT services. And if it's lucrative enough, your investors support your moves. Probably other companies need other investors, and other companies, they need to team up and build something similar, I guess.
Andrew, is that?
Yeah, no, I mean, I think it's still hugely fragmented. I mean, we may be a very big blue bar, but it's still a very huge pool of opportunity for consolidation or, improvement in efficiency, and there's lots of things to go for. And we said it at the beginning. I mean, new solutions are emerging all the time, new technologies emerging all the time. The requirements, like Laurent's saying, it's diversifying. I mean, I think we're in for another 5 to 10 years of the same thing. Okay. But, it'll be, maybe different types of acquirees. The profile might change. So I think, but largely it's the same. That's my view.
One thing, not even factoring in the global economy uncertainties, I think we're likely to all face a double bump. The bump of stepping up to the requirements of the next generation of platforms, and the bump of AI. And I think they're going to be bigger bumps than the ones we faced in previous generations. They're going to require more capital to overcome.
So the bump in AI is pushing things forward in terms of speed of delivery and overcoming some of the resource constraints that we may well face, while the other bump is an opportunity for more business.
Yeah.
Well, sorry, and I also think that we're on a path of even more globalization. So if you look, for example, what's happening in China right now, they're needing to focus outside China for their next phase. And I think that will open the world up more. There'll be more opportunity for everybody, and mobile is growing everywhere rapidly, and that's also globalizing the games world. And for all of us, I think that's new opportunity. So that's another bump in my view.
So I meant bump in as something difficult to overcome, and you're talking about something which creates opportunity.
Yeah.
I was talking about something which creates challenges.
Yeah.
I was wearing my
but I think those challenges.
My pessimistic hat for a second here.
Yeah. Well, I think every challenge is also an opportunity.
Yeah. Okay, fine. Fair enough.
So if that's the case, what's the challenge of AI? Is a challenge of AI in the development of it, or in the implementation of it, or the impact that it has on the services we currently deliver? Because it seems to me as a positive, because we are dealing with a huge amount of content and it can help drive the creation of that. But I understand it also comes with a challenge of we stylize everything, really. I mean, it's good for realistic work, but we kind of stylize everything.
But have you seen, just if you've seen that new Nvidia Gogan tool, which enables you to generate artwork procedurally. As a concept artist, it's strange, because I was actually playing around with that. And you give it an image that is the style. So you say in the style of Rembrandt or whatever. You give it some general parameters about what you want the composition to look like, and it spits out an image. Now, at the minute, it's not usable, but I have been already using it to create little background things and stuff like that in a painting. Because it saves me time having to actually, do this myself. And this is first iteration running in a web browser. Imagine what that's going to be like in 10 years' time. So I think we are going to see quite a lot of content being actually to be able to be generated by AI, which is great because it then frees up the talent to focus on the actually really key assets that do need human thought behind them. And all the filler stuff in the background can just be handled by AI.
I think we'll see artists focusing more on polishing and bringing a technical aspect to the assets, while most of it could be generated automatically. What I see, some challenges that we're going to see in our industry that we're not looking that much into it right now. When starting to is like we're going to need more and more engineers, but we're going to need engineers that are going to work more closely with artists than what it is today. Today they are developing tools for artists to then create levels and content. In the future, it's going to be more like a team working together to achieve producing everything we need, asking the artists to level up in some aspect to bring the right flavor to what will be generated more automatically.
A little bit, I seem to remember the early days of Substance when it's incredibly technical to use.
Yeah.
And artists were trying to use it and struggling to do it because it was just not quite intuitive.
ZBrush was the same, you know.
And then gradually over time,
yes, exactly.
They make it easier from their end and you get more technically minded from your end as well, I guess.
Because a lot of that technical complexity disappears into the software over time. So as artists, you know, and creators, you know, you sort of get to the point normally where you hit a limitation of what the team can actually cope with technical-wise. They're like, oh my God, this tool is difficult to manage. And then you have some smart people on the code side who will, you know, sort of make it easier to use. And then everybody's fine again, and it jumps and jumps and jumps. And I think, as Jill was saying, when we go to this next generation of stuff, we'll hit that technical boundary again where a lot of the content creators are pulling their hair out, going, well, we can't use this stuff, it's too complicated. And then you'll bring that in. But the great thing with AI as well is you now have a level of intelligence that you're going to be able to bring to these tools, which is even more sophisticated. You know, you could potentially take artists who are very creative artists who don't do anything technical and let AI interpret what they're trying to do and turn it into an asset at the end, which is very interesting.
Well, that's a positive note. So I'd like to wrap up there and thank you very much.